Hi guys, hope you're well. Just want to do a video on allowing the market to show its hand, allow price action to play out so that you gather more information. All too often when you look at a chart and you see prices going up or going down, your emotion can get hold of you and essentially make you want to get in to the trade. But the problem with that is that's how people get caught out, because on that feeling of emotion that they're missing out on a particular entry, they are taking a trade with only half the picture. They don't know the full story. And an example of that would be this move up this morning in the pound dollar. It's just an example, an educational example. But as you can see, prices go up pretty strongly. You've got 4 bull candles in a row, and had we have not known the rest of the information, this essentially here is all we would have known at the point of entry, and we'd have been obviously getting excited. Prices are making new highs. This is obviously the previous high. Bit of a weird one because it makes a new low there, but then the market never exactly plays out as we want it to, but it does put in a new high. And if you come in a morning and you see this price action just like this, then of course you want to get in. You don't want to miss the train. You want to take advantage of that. Now the problem with that is that when you're playing a game where the objective is to take money from your opponent, what better way to do it than to prey on his or her emotions? And if you think about trading from this perspective, rather than, oh my goodness, there's a move, I need to get involved, I'm going to miss out, there's a potential money to be made, which is oftentimes what the amateur does and how the amateur looks at the market. This is what the professionals prey on. They hope that you do get all emotionally involved in a particular way of a particular setup and jump in, and then of course they can take advantage of that when the prices turn against you, because they have to take money from somebody, and that money is often referred to as dumb money. It's an awful thing to say, but it's very true. If a big banking institution want to make money in a day, they've got to do it by enticing dumb money into a particular trade. There's a lot of debate as to whether or not the Forex market in particular is too big to be manipulated. To be fair, any market can be manipulated, and when you consider probably about 15 to 20 banks or institutions control probably somewhere in the region of 50 to 60%, even higher, some people believe, of the volume on a trading day, then there is definitely opportunities for manipulation. Markets can be manipulated if you've got enough money. You'll see it with central banks. The question is, can this happen on a daily basis? And I would suggest to you that it can, and it does happen on a regular basis. And also just smart investors, smart traders can see the amateur coming, and their job is to take advantage of that. Now if we come into a trading day and we look at this particular scenario, we're excited, we want to get involved, and we go along based on the information here, we buy. But then oh dear, look what takes place. Now if you think about what's actually happening here, the chances are that if you're day trading and you're a good, you've studied well and you've been told that you should place your stop losses behind swing points and things like that, which is not a stupid thing to do at all. The problem is when you apply that to the market, and in this situation you probably would have placed a stop loss somewhere below this swing here, perhaps a couple of pips below, a couple of points below, a couple of ticks below, and gone long. Now of course prices pretty much reversed. You did get some reversing candlesticks up here, but anyway, if you had missed that, then potentially you were still long, hoping for a move up into this region and taking out these previous highs. But of course we didn't get that. We got prices as pretty much as soon as you would have been excited and wanting to get in, they've obviously reversed and tanked pretty hard against your position. Now think about what is happening here. So imagine we take this trade and all we know at this point is this amount of information. So essentially, let's say that we entered the trade somewhere in here, and prices pretty much as soon as we got in have reversed on us. Now think about that, even if you're not in the trade. So if you allow price to take place, if you allow price in the market to show its hand, you gain a vast amount of information compared to just taking the trade on face value. Because if you took this trade here and it's gone against you pretty much straight away, and this is your area here where you've placed your stop loss, when prices come down into this level, you're getting stopped out, or potentially you're going to move your stop loss, which is an amateur mistake. So you might say, oh goodness, this is going against me, but I still think it's going higher. So then you move your stop loss even lower to the next swing point, and then prices keep going, and you're under massive pressure at this point, and either you're underwater for anywhere from 25 to 30 pips negative, wondering what the hell just happened, or you've already been stopped out at the initial stop loss area, which was obviously up in here. So you've got to understand what's going on behind the scenes. If there was people who got sucked into the trade up here, which is exactly what took place, there is a load of people in this area who went long, who bought the market, who anticipated this price will continue going higher. However, prices turned extremely quickly and reversed on those people. So these people now, from anywhere from sort of this point onwards, anywhere where this market went positive, where you could expect someone to get in, so maybe you got in after the first candle close that was bullish, or maybe you got in after the second candle, wherever you got into the price, into the market on this section of price action, you are at this point now, from anywhere in this section here, you are now underwater in your position. You are now essentially losing. You are either at break even in this section here, thereabouts, or pretty much you're underwater straight away. You're in a losing situation. So think about your own mindset in those moments. Think about your own mentality in those moments. What's going on? You're thinking, oh goodness, will this go up, will this go down, I hope it goes up, and you're starting to doubt the position. But as this is going on, prices are continue to pressure you, going against your position, making your loss worse, and then you're starting to get close to your stop loss. If for those people that adhere to the stop losses, perhaps you're starting to get stopped out at this position here, somewhere in this level here, and people are just bailing out of the position. You've got to understand it from the people who took the trade in here. You've got to think, what's going on to these people? What is happening to these people? Think of it from your own perspective when you've been in losing positions. How are you feeling? What is going on? This is exactly what is happening to these people in this area here, because prices are starting to crush them and go against the position. This is so important. If we just take this trade and if we just look at trading from the perspective of, oh well, we'll just get in because it's going up or it's going down, you've got no information about this trade. All you're doing is hoping that it continues on. But when you get to this perspective, if you wait and look at the market from this perspective, you've gained a vast amount of information. If you didn't take the impulsive emotional entry here to make a smart decision, which obviously would be, okay, well, if these people now at this sort of midpoint here, where essentially stop losses would be, are now getting crushed, essentially it's reversed and these people are now in losing positions, would it be smart, would it be a potentially intelligent thing to do to short the market in and around this area here? And I submit to you that that is the absolutely the smartest thing you can do. So rather than just seeing a market going up at the hard right edge of the chart and just saying, right, I'm getting in, it's an emotional thing, I think it's going to go higher, I think it's going to go lower, wait, don't take trades in that fashion. This is what the market makers of the world, the institutions, the banks prey on. They prey on the fact that you will get emotionally involved when you see candles going up and candles going down, and you'll just dive in. And how many times have you done that and prices have reversed on you? If you think about how money has to be made in any market, somebody has to lose. Now, in order for that to happen, you've got to get the herd coming into the trade on the wrong side. You've got to make them believe that something's going to happen when indeed the opposite is essentially what's going to take place. You've got to think of trading from that perspective. You've got to get smarter about how you position yourself. Don't just see prices going up and think I'm getting in, it'll continue, or I'm emotional, it's going down, I want to get involved. Do not do that. It's the worst thing you can do. When you look at a chart, you want to think, right, okay, who's under pressure, who's winning this battle, who's trapped. Always ask yourself who's trapped, who's caught, who's getting crushed, because you want to be on the side of the opposite people. You don't want to be on that particular side. And if you wait rather than jumping into the trade, you gain that advantage, because you gain that knowledge that those people never got. Those people got involved, those people got emotional, took the trade, and those people are now underwater and feeling the squeeze. And this is essentially what we want to what I submit to you an intelligent trader should be considering, is not getting involved in these first moves, waiting to see where these people are stuck, and this is where you have an advantage. Okay guys, so I hope you found that helpful. Take care.